In this video I'm going to be conducting Tattooed Chef stock analysis. The ticker is TTCF on this one. As you all know, I'm a massive bull on this company. Going to be highlighting some reasons in this video that I'm going to be buying more and why that you should potentially join me. This company has some huge potential. The vegan sector, vegetarian sector has got huge growth lined up at the moment. It is a in topic, sustainable eating, sustainable living, absolutely huge right now. If this sounds like something you're interested in, smash that like button, consider subscribing to my channel, and I'll see you in there. Hey guys, welcome back into the video. So here we are on the landing page for Tattooed Chef, and as we can see there has been a pretty decent sell-off over the last month or so, and in particular over the last couple of days as the warrants have finally been called and completed. If anybody hasn't cashed their warrants by now, unfortunately that's it, you've missed out. More on that later. Now the stock price has crashed down to $21.38 at the moment, close of play yesterday, and is down 6% pre-market today at $20.11. So that is some come down from the highs of $26, $27 at one stage. My cost basis and my position is 60 at the $16 mark, so I'm still a little bit up, but there's still room for this to come down further, and it seems to be gapping down at the moment, despite the fact that the news has happened that the warrants are now called and complete, and we've had some preliminary results out for their performance in the last quarter and year to date. So let's hop on over to the news and have a quick look there. So as we can see in highlights, the warrants have been called, the shares are issued and complete, and there should be no more dilution to the absolute amount of shares outstanding for the foreseeable future at least. Now the cash balance this company has to spend on marketing, remember there's no market, this company has done no marketing other than its own social media presence and word of mouth. There has been no actual spend on marketing so far, so they can do that now. They've got $200 million in cash to sit on and no debt at all, and then they have reported a preliminary revenue of $149 million for fiscal year 2020, and the actual date of this report is going to be on the 10th of March 2021. So they announced that the 9,108,000 or so public warrants were exercised on a cashless basis, and the result of this cashless exercise is 4.4 million of the 9.1 million shares underlying to public warrants were surrendered in the payment of the warrant exercise. So this saved the company some money essentially. So in total the company now has extra cash essentially without diluting the share price too much. However, this has had a bit of an adverse effect because obviously demand and supply, that sort of thing, there's been more shares on the market, so this did sort of affect the share price, at least temporarily. And if you can see here, you can read that what Sam Galletti has said as part of his announcement that this exercise was complete. The balance sheet is further supported. It was already in a good position anyway. They have very little debt, and they're sitting on quite a big cash pile now to really drive extra revenue streams and get the word out there about what Tattooed Chef does. So they had 39.5 million for the fourth quarter 2020, 149 million for the year 2020, representing 47% growth and 76% growth compared to previous year and previous quarters. In addition to the revenue of Tattooed Chef branded products, 24 million for the fourth quarter in 2020 was the highest quarterly branded revenue in the company history and represents a 256% growth rate compared to the 9.5 million of the prior year period for fiscal year 2020, and actually represents a 448% increase compared to the 18 million in fiscal year 2019. So this company is accelerating its growth, and it's hard to be bearish on this company. Everything is going largely in the direction of extra excessive double-digit, triple-digit growth, and the trend in vegetarian eating, vegetable-based food is only increasing, and sustainable food is just increasing at a massive rate as well. That is where the trend is going. Meat eating is in decline as people become more conscious, and then the company itself is poised to massively leverage this, and this is what I absolutely adore about this company. It's got really good branding, it's got a fantastic history in terms of the people behind it and the management team being really experienced. I really can't be more bullish on this company. It is actually the biggest position in my portfolio as well, just as a bit of a disclosure there. So of course, if you think that I'm a little bit biased on this one, then fair enough, and of course do your own due diligence for sure. So we'll be joining Tattooed Chef on the 10th of March to have a look at how they've actually done when they go concrete essentially and properly announce their quarterly results. I do of course want to be impartial. Yes, I'm bullish on this company, I really am, but I do want to obviously represent the counter argument and play devil's advocate. So of course we have some excellent examples of what the company's got going on, and you'll find really good bullish people all over the place shouting about 39% compound annual growth rate, revenues up to and over $1 billion by 2026. And you can see the company's got loads of products coming out, rapidly increasing that number. You'll find that in my previous videos. What I'm going to say is Damien Robbins has presented a decent opposite case essentially in terms of the risks that are going to happen to this company. So if we just focus in just here on what he's actually said. So essentially, revenue by cohort, marketing driving expenses higher, and limited cash could threaten the strong revenue that this company has. It's got some issues with Sam's Club essentially being quite a succinct exclusive club essentially, so it needs to get away, the company needs to get away from that sort of target market and get properly out there into mainstream consumerism essentially, and not being just this exclusive product. So there is some risk to the company there, but they need to also increase the margins that they are making on their products essentially, and this will come with the being able to bump their prices up a little bit more and getting out into the mainstream side of things. But that is a considerable thing to think about going forward on this company. But it really is sort of nitpicking, trying to be like, there's far worse companies out there that get more ridiculous valuations than this company. It has the potential, it has the cash, and it just really is, it's worth having a look into the bad side of things. But in my opinion, the risk to reward ratio here is just incredible. There's always a little bit of risk in investing in new companies and growing companies, but the sort of return that you could get, I mean, no one's going to say that this is going to go to hundreds and hundreds of dollars, but even if it gets to $50, $60, $70, that represents 200-300% returns on your investment, and it is reasonably safe doing so. It's got no debt, there's lots of cash on the balance sheet in a growing sector. That is exactly what most people look for all day long. Double-digit, triple-digit growth is exactly what we're looking for. So there we have it, guys. I've tried to present a bit of a counter argument to Tattooed Chef, but it really is nitpicking in my opinion. Like, the company is following down the same sort of route as Beyond Meat. People are absolutely falling over themselves for that company. I know Beyond Meat has got a few more deals with its the likes of McDonald's and some of the big fast food chains, but I believe that that sort of thing still benefits Tattooed Chef. I'm not sure they will ever do that sort of thing, but what they can do is get involved in almost every household across the the US, and then expansion to Europe and the UK in the long term, and get their product in every household that way and generate huge revenue from doing so. The trend is looking that way, the growth is looking that way, and unfortunately, despite trying to look at some of the odds, the bearish sides of things, I'm still super bullish on this company. I'm using this opportunity now to add to my position without averaging up too much. $20, $21 for this company is an absolute steal in my opinion, especially based on where the stock price could be at the end of the year, let alone in 4 or 5 years time. Hope you've enjoyed this video today, guys. Absolute pleasure to bring to you as always. If you could smash that like button and consider subscribing to my channel, that would be absolutely amazing. See you in the next one.